If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Bitcoin, which we'll talk about, is kind of flat on the day so far. How do you think the markets, or why do you think the markets are reacting the way they are to today's jobs report?
Yeah, so yesterday we saw an ADP private sector number that was really strong, close to 500,000, and the markets freaked out. They thought that, oh my goodness, this could mean the non-farm payrolls is going to be really, really hot. Does the Federal Reserve need to hike even more than two times in the remainder portion of the year? And so we saw a sell-off yesterday, and today's jobs number came in just slightly under expectations, which kind of calmed those nerves. So I think that, again, gives the investor the green light to say, okay, the Fed may still hike a little bit more, but there's probably, if the jobs numbers are getting a little bit weaker, maybe there's not incentive or the want by the Federal Reserve to continue to hike much more past that. So I think it's like it essentially opens a light at the end of the tunnel.
Would that be bad news for the markets?
Yeah, so I think the headline number is what's driving the retail crowd. And interestingly enough, early in the day, we did see the markets down a little bit. And I always look at the early action in the stock market as being institutional, right? That's when the most volume is present so that they can make their trades. And so I think, again, the institutions are playing it a little more carefully here, where they kind of sold into this little bit of a move here. And now that they're done for the day, it's a Friday in the middle of summer. I mean, every big institutional trader's already gone for the day at this point by midday on a Friday. I think the small investor bids the market up. And the question is, how much higher do we go? I actually think that the jobs numbers at this point are making a turn. We've seen the unemployment numbers or the filings for unemployment start to spike up a little bit over the last few weeks or so. And I think that's a new trend that's starting. So I expect the jobs numbers to continue to get weaker.
We listened to Jerome Powell. He indicated 2 more rate hikes. So not just once in July, but another one. And he said it's possible, although not confirmed. He's not taking the possibility of 2 consecutive rate hikes off the table. Yet stock markets are still up. Why is that?
Yeah, so I think there's this overall feeling that nothing can take us down, and there's some songs that mimic that and kind of talk about that. But when you get this momentum in a summer when the volume is light, it tends to be a mob mentality, and I think the markets continue to float up until something cracks or breaks. And I think, again, the labor market at 206, was it, or 2 something like that, was a little bit better than expectations, but by no means was it a bad number. And I think that's the key. As long as it's kind of this Goldilocks, the market can continue to float.
Have we met that criteria yet?
No, and that's the amazing thing about it. So these calculations and figuring this out go to charting and go to many, many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and, again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin.
There must be some logic there. Why not 31,000? Why not 30,000? It's a very specific number.
Yeah, so the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021, and it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how I mean, a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, no one's listening to me. I mean, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here.
I'm curious as to why Bitcoin has not yet breached $30,000 and maintained that momentum. There must be a key psychological resistance around the 30,000 number. Why is that, you think?
The number one, it's the even number of 30,000. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level.
Do you think we're going to talk about the stock markets in more detail, but do you think the S&P 500 has key psychological levels that are close right now? And
there's no doubt about it, right? The S&P 500, the obvious one would be the all-time high, right? If we just go up to that all-time high, but there are technical levels that on a psychological basis play out. And in fact, let me show my screen here, looking at the technicals of the S&P, and there's this trend line that has been major going all the way back to the COVID low. And what we can see here is on this first major downshift, we came right into it. And if I zoom in, you guys can see how it kind of played right there with that level, bounced off, came back, hit it again, then broke below it. And then look at how the underbelly of that level kept on hitting. And sure enough, right over here, we can clearly see that right there, that's where this market has run into pressure.
Now, do you think that's because of specific stocks that are just going up for specific company reasons, pushing up the entire index? Or do you think Bitcoin is just underperforming for other reasons?
Well, I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like NVIDIA and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark, So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here. And there's a correlation between M2 and what risk assets do. You're seeing this kind of opening. And I know Ben Cowan and I have discussed this quite a bit in the no-shill zone. You have this M2 and stock market diverging. And what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2.